So let's discuss more now, get an outlook for most of the global commodities at this time. So definitely a lot is happening in the global energy market, and with what's playing out so far with supply and demand dynamics there. I'll be discussing what OPEC Plus and U.S. shale, how all of that is being tested at this point. Joining us for the conversation, we have Daniela Corsini. She's a senior economist, research department in Intesa Sanpaolo. Great to have you on the show.
Thank you very much for inviting me.
So, are we still on track for an oil surplus, in your opinion, for 2025 and 2026? And I guess this is a case of, who blinks first, at this time. Is it going to be OPEC Plus or U.S. shale?
Well, we had this week a lot of important reports. We had the International Energy Agency pointing for a surplus of as much as 4 million barrels per day next year. We have the US Energy Information Administration pointing to a 2.2 million barrel per day surplus, but we expect the surplus will be lower. We forecast a 1.5 million barrel per day surplus, which is much lower than envisaged by the other agencies because we are more bullish on demand. We think refinery margin are very strong, especially for middle distillates, and we think refinery runs will remain very, very strong, pushing demand above the current forecast. But you are right, both OPEC Plus and the US will need to contain their supply. I think OPEC Plus will maintain a stable output next quarter, as they announced, while probably the peak in US output is probably in the fourth quarter this year. So I expect flatter output from both big producer next year. And in addition, I think Russian output will decrease significantly because of US sanction, European ban on Russian fuel, and also because of Ukrainian attack to Russian energy infrastructure.
All right, so how much downside is left for crude, if demand keeps overshooting expectations?
Well, if the International Energy Agency is right and we have a surplus of 4 million barrels per day, then oil could drop to $58 first, which is an important support. But then, if broken, it could drop up to 45 or 50 US dollar. But it's not our baseline scenario. We think 50, $70 is a very sweet spot for the US administration. I think the US and Saudi Arabia will do the most to keep oil in the current range.
And which producers would you say are most exposed to a prolonged, sub $80 Brent environment?
I think Russia is the most vulnerable, not only because of low benchmark prices, but also because of a record discount of their crude on the benchmark price. And then in second place, the Gulf monarchies and Saudi Arabia. I think they have higher fiscal break-even oil prices, so they really would need to keep prices higher than the current 60, $65. They would rather point to 80 US dollar, which is not feasible in the current market. On the contrary, oil major and the US shale producer are much more resilient. Usually, European companies could keep the current payment to shareholder and the capital expenditure plan as long as crude oil remain above 50 US dollar. So I think they will be much more resilient.
All right, so definitely we know how geopolitics tends to drive sentiment with the commodities markets. Do you still see a geopolitical risk premium? Has that structurally changed so far?
Yes, the geopolitical risk premium is very important now, but it's true, it's structurally changed compared to the past. Thanks to information, we have much more real-time information. We know exactly where are cargo going, how much fuel they transport. We know how full are deposits. We know which are the damages to infrastructure from attacks both in the Middle East and in Russia. So we have much more data to work on. So the market is less reactive to geopolitical tension, but it is able to react much more quickly and sharply when a supply disruption really occurs. So this is the big difference with the past. We have more news, so more volatility where when an event occur, otherwise more stable markets.
All right, and definitely, I know some of the traders want to know what to expect for prices, especially with Brent. What type of event will truly move oil above $100 again?
I see geopolitical risk as the main driver, and I'm especially concerned with the Middle East, especially a blockade of the Hormuz Strait would push prices above 100, but it's quite unlikely at the moment. Hopefully, if the tension around Israel and Hamas ease. And then the second point is Russia. If we have escalation in the conflict between Russia and Ukraine, we can have supply disruption from Russia, and this is a severe risk for the global economy.
All right, definitely. We'll keep tracking that market. Thank you so much. It was great having you join us. Daniela Corsini, she's a senior economist, research department in Intesa Sanpaolo. Thank you for coming on today.
Thank you very much.